Hi everyone, my name is Simon Mishevich from Optimised Accountants, and now I'm going to be talking about an interesting subject, not really, but it is important for you to be aware of it, so let's crack on. It's called the Annual Tax on Enveloped Dwellings. What a wordage. ATED for short. And ATED, what is it that we need to think about? Well, it's for UK limited company owners that own residential property. So we'll go into the detail of this because it needs to be submitted now in April. So if you haven't done so, you need to make sure you're on top of this, or your accountant is, for that matter. So let's talk about ATED, what this is. So ATED, and again, just as a repeat, is an annual tax of enveloped dwellings. Okay, so ATED in a UK limited company. Right, got that done. So ATED is an annual tax payable mainly by companies that own UK residential property more than £500,000. By the way, if you want to know more details, just Google search ATED or go to that URL shown on your screen now, and it will take you there. So you'll need to complete an ATED return if your property is a dwelling. Okay, so a dwelling, what is that? We'll talk about that shortly. Find out the meaning of a dwelling in the next section. Okay, we'll do that. Is in the UK. So if you have a UK limited company that has properties elsewhere, not in the UK, then you don't need to do it. Was valued more than 2 million from 2013-14. So these two change, so you do need to be aware of it, and you need to be on top of it yearly because it could be less each year, and I rather suspect it will be. It dropped to 1 million for returns from 2015-16, and then 500,000 for returns from 2016 to 2017 onwards. Okay, so we're in 2025, 2026, 2027. Is that value still the same as 500,000? You do need to check the details. Okay, so it's owned completely or partly by a company, partnership, or collective investment scheme. So if it's got any ownership by any of those three things, you may need to do an ATED return. Meaning of a dwelling. Now, meaning of a dwelling, for me, from HMRC perspective, it is typically somewhere where you have separated facilities. So it's a home, you have washing facilities, cooking and sleeping facilities. And as long as it has all three of those components, so again, sleeping facilities, washing facilities, cooking facilities, makes it a dwelling for HMRC purposes. Here, what they're saying is your property is a dwelling if all part of it is used or could be used as a residence. Example, house or flat. So there you go. It needs to have one of those three components. It includes any gardens, grounds, buildings within them. Find out about valuing different types of properties. We'll ignore that for now. For mixed use, some properties not classified as dwellings. These include hotels. Don't mix that up with furnished holiday lets now though, because they are not going to be classified as a hotel. Furnished holiday let will be a residential building for this purpose. Guest houses, boarding, school accommodation, hospitals, student halls of residence, not to be mixed up with HMOs. HMOs will still form part of ATED. Military accommodation, care homes and prisons. Anyone own a prison? That'd be interesting. If you do own a prison, please do tell us what it is. Maybe you can't. I'm not sure. Okay, value the property. So what do you need to pay? We'll talk about this. So the amount of money you'll need to pay is worked out by using a banded system based on the value of your property. And it needs to be an up-to-date valuation as well. So just because you had your property valued for a remortgage 4 years ago, is that appropriate? No, it needs to be revalued for today's purposes. How do you value that? Could you go to your estate agent friend or your letting agent friend and say, could you make sure that the property value is below the £500,000 so I don't need to do this ATED? Yes, they could. But if found to be fraudulent or incorrect, the penalty lies on with you. So make sure that your property is being valued. And that's pretty much saying that you need to have a value of your property. So get that done there. So there are revaluation dates every 5 years from April 2012. So have a look at this and find out when you've got the property done. So typically I would say 5 years, make sure that property is revalued. Okay, what you need to pay. So anything above £500,000 and 1 million, there's an extra tax charge from corporation tax that you're already paying. You've got this additional tax now, £4,450, which is quite a lot. Anything for properties of £1 million to £2 million, there's an annual charge for ATED of £9,150. Anything above 2 million, etc., etc. You can read that yourself. But look at this, a property for 20 million. I'm not sure how many of you own that. It'd be nice, wouldn't it? You would have an ATED charge of £292,350. Quite a lot. So there you are. So you need to make sure that, one, you understand what a dwelling is. The property value, it's 500,000, but could that change in the future? You need to understand that you need to revalue the property. You can't just rely upon a value from 10 years ago, and I think that's okay. It's not. And then you need to understand what your charge is, and you need to pay that to HMRC when you're doing your return. So there you go. ATED in a nutshell. Make sure you do it as soon as you can.